All right,
Yes.
super. Hey, I'm glad everyone showed up today. I just got here, so fantastic. We're going to be talking about multifamily investments, what they are, how to invest in them, why you want to invest in them, and a little bit of Q&A for people that have some interest in multifamily investment and why you should do it and how to get started. First of all, everyone knows this is something that came up just recently about commercial and residential. And assets are divided into two classes, right? You have commercial and you have residential. And the reason that they're classified that way is because of lending. Lending classifies residential from 1 to 4 units, and the commercial stuff is 5 units or more. And then, of course, you've got industrial and you've got other things like that. But in the residential world, that's the difference. And the reason they do that, they offer different products to the people that are financing 20, 30 doors in an apartment building than they do for someone who is going to be purchasing, let's say, a duplex or a single family home. The products are usually fixed for a number of years, usually 5, 3, 5, and 10, maybe times some 7. And then after that, for the rest of the loan, becomes adjustable or a variable rate. So the payment would fluctuate over time depending on what interest rates were doing. For example, if you had one that became unfixed at this last month or two, you would see an interest rate that would go much higher than what you were used to paying. Of course, your payments would go up. So commercial and residential, just so we know why things are classified that way, and it's the lenders that have done it to us, and it's always the banks, always the banks. So when we get into multifamily investments, anyone here own any multifamily? Ever been an owner in a multifamily? You know, it could be 2 units, it could be 20, it could be 200.
I did. I owned a 4-unit building.
You did? Okay. And did you end up selling that building?
I did. I sold it, and we bought then we went into a 3-unit building, and we got rid of that. And it was, time to move on and buy a house.
Gotcha. Fantastic. All right. Anybody else?
I regret selling them now. Okay.
Yeah. That's how that goes. Well, I'll tell you. So the reason that people get into this business of owning multi-unit is always some sort of reason. We want to make more money. We want to make passive income. And all the reasons that you get started in multifamily are important, right? It kind of motivates you to, the reason why you're going to be doing it. But as you get into these investment products, as you get into multifamily, what's really more important than understanding why you're getting into it is understanding what's your exit strategy going to be. And that's because, and sometimes in these, and most of the time, do you ever get started all by yourself? So let's say you need to raise some money in order to purchase, let's say, a 10-door apartment building, 10 units. But you don't have all that money. So you've got to reach out to your friends or, dare I say, family. That can get messy, but friends, family, whoever, people that are looking to invest in the multifamily and earn some passive income and some return on their dollars rather than just putting it in the bank account or getting in the stock market or mutual funds or whatever else you may be invested in. Well, getting out of an investment like this is really important that everyone who is involved in it understands what we're trying to accomplish. So if I came to you and I said, listen, I'm trying to raise $5 million and I have this idea to purchase this particular multifamily apartment. And first I want to talk about what I plan to do with it. And what I plan to do with it is to keep it forever for generational wealth and pass it on to my kids. Well, maybe the $1 million you want is not what you're looking to do. You don't want to keep it forever. You want $1 million. You like to get a good return on your dollar, but you'd also like to get your $1 million back out at some point and buy something bigger. Maybe you'd like to trade this apartment building and do something else. So your exit strategy would be different than mine. So knowing what you want to do with the multifamily that you buy and the exit strategy that you have, one, you need to know just by yourself because you have to have a plan. Two, you definitely, if you have more than just one investor, you have to all agree on that. And I would say get the exit strategy, get it in writing, is what you intend to do, so that everyone agrees on what you need to do. And why is that important? Well, it's important because when you want to, let's say, sell the building and you've got 4 partners, this comes up all the time. I'm dealing with one right now, 6 partners in the deal. And we need one more signature to make the deal go. But she's holding off because she can't figure out what she really wants to do. Does she want to trade her dollars with the group to buy the next best thing and defer her capital gains tax liability? Or does she just want to take her portion of the investment, pay the taxes, take the cash, and do something else? Or does she even really want to sell at all? Which brings you to what can be the biggest problem. If not everybody wants to sell, you can't sell it. And that's, without huge trouble and legal action, you can't sell it. So you have to be okay with the exit strategy. And the exit strategy can be whatever you want it to be. Like I said, generational wealth, we're going to trade this in 5 years, and we're going to buy something bigger, and we're going to continue to buy something bigger and bigger and bigger and bigger until we get something that maybe we go from multifamily to a retail mall, where you have single tenants, or you have a lot of tenants in one spot in an industrial park, or maybe even in a retail center, depending. But your big why of exit strategy is more important than anything, because you can come up with a really good reason to buy almost anything, right? You walk into Costco and the TVs are on sale for $1,200. Looks like a good deal. I don't need but I do need to figure out how I'm going to get home, and I do need to figure out if I can afford to pay for it. So you got to have a plan on what I'm going to do once I have it, right? It's the same idea. So keep that in mind. So now you got your exit strategy all set. You said, you know what, we're all agree we're going to sell this in 5 years, and we're going to fix it up, and we're going to get the rents a little bit higher, and we're going to make a little more income, and we're going to create value in this building. But which one did I want to buy in this scenario where I'm raising the money? Now you've got your $1 million, and I'm running through going, okay, this is how we're going to be doing it. But all of a sudden, the opportunity in between the time I was raising the money and the opportunity went away. So I've got to find another opportunity, and I've got to come back and ask for your $1 million with the other investors as well. So how do you pick a multifamily apartment? What are you looking for? Well, these reasons can be all over the page. And that too is the second most important reason about wanting to buy them, and what you have available to you and what kind of resources you have. If you got a lot of money and you want to come in and fix a place up and make it better than it was to sell it for more money, that could be one. Maybe you just want to put your money in a place that is already been remodeled and doesn't need any work at all, and you're just going to collect a return. So you have to decide, how much money you have, what makes sense for your group as well, where you're going to buy that, right? So we got to talk about that as well. And then, obviously we've got to figure out the financing. So in identifying different properties, lately it's been very difficult to find what we call value add deals in this industry. But with multifamily, whether it could be, 3 unit, 4 unit, 20 unit. A lot of people like to identify the ones that need a little work so that they can buy it for less money and turn around and sell it later, if that's your strategy. But I think it's really important to understand that you got to be able to do the things you need to do. You got to be able to afford them. So if you're buying something that needs a lot of work, you don't have a lot of money, that could possibly be a problem, the challenge. And then you're stuck with a bad property, something that we classify as like a C-class property, and hopefully your location's okay, but your location could be, based upon the rents, could be a place where the rents could grow even without fixing it up. So there's a lot of analysis that goes into the process, and the more advanced you get, the easier it becomes, but it's never just that easy. You have to look at a lot of, I would say the biggest location issue is always do these apartment buildings, do they rent well? Do people want to come rent them? Did they get the highest rents? Is there a possibility that I could get better rents later based on the location? So some of the submarkets that we see, like in Long Beach or Torrance and even Signal Hill, outside of the LA city, have been real hot lately because a lot of people that have owned these have owned them for a long time, and they're exercising their exit strategies. So a lot of times when we look for them, we look for multifamilies that aren't for sale, ones that people have owned for a long time and haven't renovated. Maybe there's a deal to be had there, but it just really depends on what you're looking to do. And there's always one or two that you can find to meet the needs of your investment group or just yourself. Now, one of the strategies that I really like a lot, and especially if you're getting into it on your own, when it's your first one, I do like, as Richard was talking about, I like the 3 and the 4 unit deal where you can get in and actually live in one. If that can work out for you, live in one of the units and then rent out the rest and get your start that way. Now, the advantage of doing that, which is fantastic, is from a lending perspective. We started the conversation about lending and commercial and residential. The deal is that if you were to live in one, now it becomes owner occupied. And owner occupied, and let's say you got 4 units. Well, the financing behind that is different, right? Because 1 to 4 units, that's a residential lender. You don't have to come up with as much down. So what you can do is you can come with less down, get into a 4 unit, live in one, and then obviously the rents help make the payment for you. Now, in this particular case, because you're living there and if you have a job, then the rents don't have to cover the mortgage per se because they're just helping you. But over time, you could pay down that mortgage balance with the funds that you get so that the refinance that you do and the payment you would get the next time around would be covered by all the rents if you were to move out. So let's say 2 or 3 years go by, you decide, now I'm going to move out of here, or I'm going to move out of here and I'm going to refinance, and I've got an idea about why I'm moving out because I'm going to buy, like Richard said, it's time to buy a house. Well, if you don't need the money to buy a house, you want to buy a house, you're moving out of this, then you got to ask yourself, what's the 3 things that most people focus on in these things. One is, are you looking for cash flow out of the property? So every month I'm not writing a check, but it's writing a check to me. Are you looking for return on your investment? Are you the kind of person that looks at, I put down, 30 grand and I want to make sure that I'm getting a 5 to 8% return? Is that what you're looking for out of this particular investment? And of course, we all know that equity over time is a growth number. It just depends on what number you're looking for and how much time you have for that equity growth to happen. But most of the time, people like cash flow. I'm a heavy cash flow guy. So my return on investment out of the gate when I first buy a place does not really look good because I usually put too much money down, but my monthly mortgage payment is low. So I'm servicing a debt that's lower, and I get a check every month that's to me for every quarter. So it's not costing me any money. So I like cash flow. Some people like return on their investment, which is fine, right? The ROI. But you have to ask yourself, in this scenario, in 4 units, have you paid down the mortgage enough to where you could move out and all 4 units would pay for the mortgage and maybe a little extra for you to have dinner once in a while without having to charge them your credit card or use the income from your job? Maybe save up some money and buy a new car or a new building. So you have to ask yourself that question. But I do like the 4 unit deal, the multi-unit, so you can take advantage of the owner occupied financing, which, by the way, is fixed for 30 years. So if you get yourself in a position where the mortgage is really low, it's fixed for the life of the loan. And that's the advantage, for doing an owner occupied up to 4 units, because the mortgage itself is for 30 years. Does this make sense so far? Does anyone have any questions? Any disagreements?
Sounds good. Like how we did it the first time, sounds good to me. I'm just wondering, I might be getting ahead of you, but in this market, with the corporation gobbling up all the 4-unit buildings, how do you get into this now?
Well, that's a great question. So how do you identify how do you identify these? Well, obviously, through KW Commercial, we have access through that kind of data. Obviously, the good commercial agent or broker has that ability to see assets that aren't for sale, because those are the ones you got to look for. I know in this particular market, there's a lot of that going on, but there are still deals to be had. Interesting enough, the 4-unit, the fourplexes, that data is not tracked as well. It's interesting. It's almost like a no man's land when it comes to the fourplexes and the data. It doesn't always fit on a commercial plate, so to speak, and the residential data doesn't always track it as well as we'd like to see it from our end as agents of commercial. But the deal would be to, a lot of times, to sometimes drive in an area where you see there are multiple fourplexes around, and get an idea of the addresses and go find their phone numbers or knock on their door. Look at the tax records and send them a letter and say, would you be interested in accepting an offer on your fourplex today? Have you thought about selling? I'm an investor and I like to buy. I mean, that's what these large institutions, that's what they do. And, I can tell you, on my best day, getting lucky, just knocking on doors sometimes, whether it's a virtual door or actually knocking on the door to find the landlord, ask the renter, hey, you rent this place out? You have your landlord's phone number? It's a great way to do it, especially like in Long Beach. I always use the Lakewood Boulevard as a really great place to go shopping, because you get up past Carson and you get a little bit past the LBX, and on both sides of the street are these massive, I think they're mostly duplexes, but they could be larger. And they're just in a row all the way down, up towards Lakewood Mall. It's crazy. So it's like you go, I don't even know how many there are, and they don't sell all that often, but I know that that's a good thing because people have owned them forever. And you just go door to door to door. You could probably find one in there. Pricing on these asset classes right now are very expensive. Most of them are been expensive for the last 1.5 years, 2 years or more. The good news is that some of these prices are going to be coming down, in my opinion, because financing has gotten more expensive, and you just can't be offering something that gets a 3% return when your financing is 4.5%. That makes sense for a lot of investors. So I think some of the pricing will adjust itself soon. And the other thing about this market too, if you're looking in the multifamily asset class, is that how do I put it? The investors that are putting money into these, like Blackstone or some, there's people are buying some large residential purchases, portfolios. Some are just doing it purely to put their money somewhere. And when this craziness that we're involved in right now with inflation and everything, it seems like a really good place to put your money, right? Because if you just got your money sitting somewhere that doesn't protect you from inflation, it's like having a hole at the bottom of your water bucket. Eventually it's going to leak and not be worth, have no more water left, right? So they're saving themselves by hedging inflation through large transactions, and you'll see them put a lot of capital into these portfolios. Some they'll keep, but eventually they'll sell them, because this nonsense that we're involved in right now will not be forever, right? This too will pass. Inflation will come down, right? Prices will come down, and it'll happen. When it'll happen, what have you, that's a whole different podcast. But I think, over time, there'll be deals to be had. And there's also going to be people that are going to get themselves in trouble, people that have not done a good job of smart leveraging, people that don't have the wherewithal to stand through time. So I think there's some deals that are going to be coming. And I think we just need to sit and wait. And if you've got patience, you'll be able to find opportunities. Now, opportunities are going to be everywhere. And we were sticking with the fourplex example. One of the places we used to look a lot were the college towns, San Luis Obispo, Berkeley, places where there's a lot of or there wasn't enough student housing. I think right now Arizona's going through that with ASU, I believe. They've got like 100,000 students, some god awful number, and they don't have enough housing. So there's a lot of opportunity in college towns around the United States, that I'm sure of. And I think that the best part about the opportunities is not having to buy something. And that gets us into, when do you have to buy something? Well, when you're first starting out, you don't have to. But if you're going to be part of an exit strategy, it says, I'm going to grow my first investment and double the money on the deal as part of a 5-year growth plan. Then what happens is that all of a sudden, now you're at that 5 years. Investors are all part of the same exit strategy. You've done your financing, your cash flow is good, but you want to buy something bigger because you can sell this for twice what you paid for it. Well, then you start getting into your up leg property, the one you're going to trade for, so you can defer your capital gain liabilities. And you get yourself in trouble because you sell yours so fast. Now you got 45 days to identify, and your heart's racing a mile a minute, and you can't find something to trade into. It can be a real problem. It's a huge problem for a lot of people. If you were to buy something from someone and ask them, hey, would you be willing to accept an offer? Yeah, I tell you what, I'll accept an offer today, but I got nothing to buy. And so I'm not as motivated. And a lot of times, in what we do is we actually bring an upleg property, right, the next property, to a potential seller and say, look, would you be willing to buy this if we could sell your 300 doors, 300 units? And they say, well, that's interesting. Tell me more about it. So a lot of these people don't have anywhere to go. And if you sell yours and you don't have anywhere to go, it can be costly because you've got to identify, but you also have to close your transaction within 180 days, depending on the kind of exchange that you choose to do. We use Phil Antoine, and he's great. But I think if you get yourself in that position, it's because you weren't identifying while it was an escrow. Was the point of all this is that when you have the need to sell it, start identifying while you're in escrow. Try to make offers on places while you're in escrow and see if they would take a contingent offer. Hard to do these days, but it's not impossible. And you don't want to put yourself in that position if you have to sell. But when you're just investing with the first round of cash and you're not trading equity for the next purchase, have some patience, put some money aside. It's a good time to gather some friends and family and say, if a good opportunity came up where we can make some money, would you be interested? Yeah, I'm sure I'd be interested. What do you got in mind? Make a list, get people ready, because when the deals start coming off the shelves and they came, for either distressed properties or one reason or another, there's opportunity there for you to buy. A lot of people that we identify are coming down to their depreciation cycle where they no longer have any depreciation left. So they end up having to pay that money back to the government in taxes. They look at that and say, oh boy, it's time for me to sell and trade up, right? I mean, they don't pay the depreciation back until they sell it, but you don't get to write it off the gross income of the asset itself. So there's nothing left to write off, so to speak. So in essence, you're paying more money to the government on the income. Anyway, so that's really important to know that if you're going to wait and identify stuff, have a plan, Make sure that you want to identify the ones that you want and can handle and can afford. Obviously the lenders help us out, just like residential purchases, give you an idea of what you can afford. You'd be surprised at what you could afford if you were going to occupy a 4-unit. I think people are always kind of miffed about how much more you can afford if you're going to buy a 4-unit and live in it. And I challenge all of you to do something like that and reach out to a lender and say, based on my income, my tax returns, how much could I afford in something like that? And they'll let you know, because they have their math and how they go about giving you credit for income from the potential rents and so forth. So that's part of it. And sitting on the sidelines and being patient is a huge opportunity for you. Unless, of course, you just got a lot of cash and you want some return, you don't want just sitting around in your bank account. You still don't have to purchase. And it's a nice place to be. So remember, when you do come time to sell, it's really important that you take the time to start identifying while it's in escrow, because the clock doesn't start ticking on the 1031 exchange clock until after you close escrow. Very, very important process. And people get stressed out. It's definitely a stressful time. Now, in some cases where we have not found product for our clients, let's say you couldn't find something to trade into, the passive investment groups like King's Barn and the DST groups, they offer great opportunity for you to have passive income. It's a little different because you're not in control. You don't collect rents. You just get a check for the income and the return. But you can, in certain circumstances, exchange your equity into their investment vehicle. And that's an important out if you end up being in that cycle where you haven't identified anything and you don't want to pay, was it 35% or whether total and capital gains tax, you don't want to pay that, then you want to defer it. That's always an opportunity. So keep that in mind as well. Even if you had to keep it in there for 5 years, at least you're making a return. At least that's kind of where we found ourselves with a lot of our clients, because we've been in that opportunity too, where you have a multifamily, there's nowhere to put it. There's nowhere to take the equity, and you're dealing with lots and lots of money. Nobody wants to pay that kind of tax. They're always looking to defer it, or, I'll let my kids pay it. I'll die and then they can pay it later. But it's just really, really important that you have a plan how to get out of it when it's time, and that all the investors are in agreement going in. Like I said,
are you talking about a REIT?
No, REITs are a little bit different, but there are different investment vehicles that you can trade into, and it's just always good to have a couple choices, a menu of when you have to pull the ripcord and get out quick.
Yeah,
it's good to have choices and not put yourself in a corner where I didn't have to sell it. I sold it. I made a lot of money, but I paid half of it back to the government. Oh boy.
yeah.
Right? That's not wealth building. But it happens. Some people prefer just to pay the tax. I do run into that. We'll just pay it and I can have the cash and I can buy something else later. I mean, it's always an option. It's just not, I don't consider that to be the best option, but for me personally. So then let's talk about, this is a good one. And part of your process of looking for your first investment, it's really important that you work with somebody who can give you an understanding of what the rents are going for. However, doing your own work is fairly easy these days. All you have to do is go, you can literally go to any rent site, apartment stock, and you can get surveys on rent. You can see what the places are renting around there for. You can get an idea of what things are renting for. And you just got to know how many people want to live in that area. So do they have a lot of vacancies or not? And I know we have shortage of housing, and I know that people pay a lot, but there are some cases where there are vacancies in certain asset classes, certain areas where they can't get high rents, or they can't rent them out because the rent's too high. I mean, at some point, the rents are going to have to cool off because people aren't going to be able to afford them. I mean, around here in Long Beach, it's astonishing what people are paying for rent. It's absolutely unbelievable. I mean, there's let's see, I'm trying to think if y'all know Long Beach off of Stearns and Los Cayos to Ag, there's a lot of duplexes over there. They've just lined up. They were built back in, I don't know, 40s, and they're all kind of the same building, right? A lot of duplexes, you know, it's like you owned one, you'd have parts for the others that you own. They're just exactly the same. Anyway, one of the potential clients that we have rents his 2-bedroom, 1-bath in the back for $2,600 a month. 2-bedroom, 1-bath, maybe 1,000 square feet. I mean, that's a lot of money. And the one up front, he gets 1,400. They've been there a long time, but he probably could get 2,000 for that. Now, the one up front, he got someone to pay that. It's a lot of money. But think about that. You could, if you were owning a duplex and you bought one over there for $1 million, let's say, you would be getting a minimum of $4,000 a month. And if you had to put, you know, yourself in there, you could be earning $2,000 a month to help you pay the mortgage payment. And I'm not a finance mortgage guy, but I'm figuring $600 for every every 100,000, right? That you finance to cover your taxes, insurance, and interest and principal. Guess, right? So if you moved in and you only had, like, I don't know, 5% down, you're financing almost $1 million, your payment's $6,000. So think about that. You know, you get $2,000 from the person that's renting in front. Now your payment's only $4,000. Still a lot of money. So a lot of people don't do that. Obviously, they're usually buying something with a little bit more power, and 4 units usually allows you a better opportunity to get cash flow and make it work. But some of the owner-occupied version of a duplex, triplex, or fourplex makes most sense because the financing, because a lot of the investment dollars that look towards, let's say, a 4-unit doesn't really pencil very well. And when I mean pencil, it doesn't give the kind of returns that's comparable to something that's 10 units or larger, getting the same return in finance, cash flow, blah, 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 blah. So, but the rents have to come down at some point. They got it because people won't be able to afford it. I mean, I don't know who can afford $2,600 for a 2-bedroom, 1-bath. That just seems insane to me, but they do. Any other questions so far? Has anyone been thinking about it?
My wife and I were just talking about it. I'm just getting back in. But I mean, what are the prices on like 4 units now? They're like 1.4 million, aren't they?
Yeah, some in certain areas, yeah. 1.4, 1.5 million. I mean, in California, outside California, you know, the price is a little bit different, but they're going up too. Yeah, the prices are pretty expensive. And, you know, but as a means of getting into an investment property, as crazy as it sounds when I say it out loud, that's fairly inexpensive to get in versus, you know, something you're buying for 7 million that's got 22 units, right? $7-8 million. I mean, some of these, and they're small square footages, some of the larger, more unit assets, some of the square foot. I mean, it's astonishing. 700, 650, I mean, square feet per unit. They're really small. But the 4 units and the triplexes and the fourplexes, I mean, at 1.5 million or duplex of one, so 1.5, 1.4 million for something like that. It's fairly inexpensive if you can make the math work and make the payments. And of course, you've really got to take into consideration, I don't think it's really a hard to do, but if you pull up to when we're talking about location, when you pull up to an asset and you sit in front of it, Could you see yourself living there? Or ask her, would someone rent from me here if I own this, and why? So you can get all the data you want, but if people don't want to live there because it's run down or, well, for 1,000 different reasons, would you want to live there? If the answer is yeah, then you probably have a good place to start thinking about investing. I mean, the numbers have got to work, but I always look at it like, hey, we take care of the buildings that we have so that if I felt like I had to live there, I'd be okay with it. And that's a good reason to rent. That's a good reason that people come to rent from you, because you like the location, you like the area, and it makes sense. And I mean, unless you like owning places and inner cities and things like that, to make it harder for you to keep up because of vandalism or crime or things like that. It's just there are people that rent in those areas strictly because the land's cheap and they get the rent and they don't care. But I've always taken care of my properties no matter where they were. And if that's kind of when you're looking at the fourplexes and living there and actually living in it, well, there you go. Would you live there? Yes. Well, then this is the one I want to buy. So, it's not as difficult to find the ones you want to buy, just whether or not you can, make it work, and change the minds of people that are already there if they want to sell it or not. That's the kicker, right? For all of us, whether you're in commercial or residential, you got to come up with a sweet reason to give them a reason to go and do something else. Has anyone ever sold a 4-unit? Or a multi-unit? Does anyone want to sell one? Okay. Does anyone have any questions about the purchase process? About when you're in escrow and how different is that than, let's say, a residential home? Well, the fun part about the multi-unit is it's like a single family home or right on steroids. So you got to look at each one of the units to know what you're buying, obviously. And you also have to make sure that you get the rents from each one of the units. And you have these agreements, the estoppel certificates, to make sure that what the landlord's telling you that the tenant agrees with. Even if you had a lease for each one of the units, you want the tenant to confer this is what's going on, this is how much I'm collecting, this is how much I'm behind, blah, 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 blah. That's the most important part. Now, when you get into the due diligence, a lot of times you're not going to find an inspector who's going to be able to give you what you're looking for in an apartment. There's not too many of them that are any good at doing it. So what we do is we bring in a team of people. I bring my plumber, electrician, a roofer, right? And we have people going in, foundation people, and we have them look at the bones of the property to give an idea of how much work am I talking about here, and what's the potential cost of doing business by purchasing this particular asset. And a lot of times, the plumber, electrician, them, they'll come out to look at the work because they know they're probably going to get the job. That's kind of what they do, right? But we have a specialist come out for every portion of it so that we don't miss anything. So it's not really an inspection like with a home. I mean, some of the inspectors will do duplexes, but triplexes and fourplexes and anything bigger. Hard to find people that do a really good job of that. So we bring in a team of people, get an idea of cost, you get an idea of the rents, right? The one thing that I like to get, there's a report you can order. It's an insurance. It's an insurance product, or not a product. You can get through insurance companies. We want to find out if there ever been any fires, how many times the police or the fire department's been called out to this location. We did this one time and found out that there'd been a major fire in 2 of the units, and it had happened just before they put it on the market. and we found out that they didn't renovate them. They pretty much just scraped them down and put paint on it. And it was kind of a problem because they didn't disclose it to us during the process. So we found out that the fire department had been there on this particular date, and you can order that information and find out. It's very helpful, because sometimes those two things can kind of meet together. Like, well, why was the fire department out here on the 28th of March? What were they doing out here? Did someone die? Was it a fire? You know, that kind of thing. So that's one thing that we do to help understand. And maybe there was a roofing issue. You just never know. But in most of the process of the multi-unit purchase is just about understanding how much money's coming in, how much money going out the door, who's paying for what. So are the tenants paying for the water? Are you paying for the water? Lights? Are they, you know, how are the utilities? What extra costs are there? Because a lot of times people pay a management company a fee, which is normally about 3%. You should be able to get everything you need for about 3%, but sometimes their costs are really high. So sometimes we'll do an analysis, look at the costs that they have, and know that right away, without even doing a thing, we can reduce the costs just by the expenses that we know that we can do it for a lot less money. So we know there's an upside right when we take over. So we look at, you know, we look at 24 months of rent, last 2 years of the rent rolls, and take a look at their finances and statements and see what expenses are there. And that's an important part, different than what you do with a regular, even if it's a single family home rental. But it's not too difficult. And when you do the analysis and figure out maybe where they're hiding money or where they're doing weird things, you can kind of do that. And professional in the business, we can always help kind of identify some of that information.
Can you do a trip? Oh shoot, echo. Can you do a triple net lease on a multifamily?
It's not done very often because you got different people, right? It's not as common as just a regular, but you could. You could. There's I can't remember the name of it off the top of my head. There's a software that for apartment buildings that have shared water, gas, and why I can't remember the acronym, the software, but it's a report that it basically splits the cost of the utilities for the shared water, gas, which is kind of cool. A lot of property management companies use that, but the triple net, I mean, I've never seen it in multifamily. I mean, it's just not common. Obviously, you see it in commercial leases for retail space or industrial space, office space. Anybody else have any questions?
What's your ideal cap rate for looking for multifamily?
Well, it's kind of an interesting question, because ideal cap rate would be like 16. You know what I mean? What cap rates are we seeing today in the market and some of the sub markets that we look for business and so forth for clients and even ourselves? 3.5 cap. And then if the place needs a lot of work, maybe 5, 4.5, 5. Remember, cap rates and prices have an inverse relationship, right? Lower the cap, higher the price. Higher the cap, lower the price. So you know, if you see something that's a 6% cap, what's going on there? Rents are low. Then what's going on, right? Either something's wrong, especially in this market. So identifying what the cap rate is helps you understand what's going on, or to ask more questions. But right now it's like 3.5. And I think those cap rates are going to go up because of financing becoming expensive. All the rates have kind of quieted down a little bit. So I was expecting maybe a joyous occasion of price corrections all over the board, but I don't think that's going to happen because rents just keep going up. Rents are going to have to definitely come, to a stop, halt, whatever, and going up before a lot of price corrections happen in the multifamily because of the amount of demand for this stuff. It's incredible. And you have people that are doing syndications, right, raising money to buy millions and millions of dollars worth of this stuff. So the demand's really high. So I don't see it getting too buyer friendly anytime soon. Anybody else? No? Okay. Well, I hope that was helpful today. Don't make it too complicated. A lot of people they make this process so complicated. It doesn't have to be. The number one, the two things you got to remember: form your exit strategy first, right? And then figure out how you're going to do your financing and what that looks like. And once you figure that out, then you can go identify some buildings that make sense. So once you find something that makes sense and you got the other two taken care of, the next process is just going through the process of writing the offer and closing the escrow. A lot of people make this process so difficult, and it doesn't really have to be. It's usually a pricing thing, but a lot of people shy away from certain areas, which I find to be really much better than what they think. I'm a big fan of, like I said, college towns. I think those are places where you can, as I did, paid rent for my kids to go to college. It was a disaster. It was like 12 months and my kids were only there for 9. What a moneymaker, because over the other months that they weren't there, they're just collecting rent and there's nothing about anything. So, the college town stuff's great. The 12-month rent, they're only there for 9 months, maybe 8. I had one where the lady was studying abroad, but she signed a 12-month lease and they paid it. It's crazy. So hopefully you guys can find something down the road that makes sense and start, building some wealth this way, which I think we talk about passive income in this business, we talk about run your own business. I go toe to toe with anybody about best way to do that as an agent in this business, because you make enough money where you can make deposits and down payments that make sense for these things with the kind of money that we make. And I think that over time, the thing that I've learned the most from a bunch of investors that are over 85 years old, and they always say a couple things that are always the same. I overpaid for most of the stuff I own, but I bought it in 1975. So what do I care about that today? So you find a good place and you pay a little more than you wanted to. 5 years from now, it won't matter. 10 years from now, it really won't matter. It's just about getting, the place that you like, you think you can exercise your strategies and your plan. And hopefully over time, you can create more wealth, which will hopefully give you more time to goof around and do whatever you like to do when you're not working. That's what I always thought it was about. So that's it. Thank you for tuning in today, guys. Appreciate it. And I'll be back next month.
Thank you very much.
Yeah. Thank you. Any questions?
Thank you, Jason.
Thank you.
Thanks, Jason.